So let's take a look at a couple pairs for next. We're going to talk about patience and how these pairs are setting up and what we would be looking for in the market and how I do my top down. Okay. All right. So let's do this. So the first pair we're going to take a look at is the pound USD, right? And guys, for me, I don't really read a lot of fundamental data when it comes to trading. I'm for the most part, I'm a technical trader. So I'm just looking at the charts and trying to make really good trade decisions, right? So I use my top-down approach, and from my top-down approach, I can kind of get a good understanding of what the market is, what to do when the market does what it does, if that makes sense. So it's like a what if scenario, right? Or if then scenario. If the market does this, then I'm going to do that, right? So let me show you guys what I mean. Let me go to my indicators. Let me take it. Okay. So let's look at this. Let's look at this pair. So pound USD. This is how I go in every single week and break down the pairs that I'm going to trade. I like trading the majors for the most part. My favorite pair is the Euro USD when it comes to Forex. And this is how I actually go in every single week and look at all the pairs that I trade. These are all the pairs that I trade right here. So I just go in and I just take a look at it and see what pairs gives me the best opportunity. There's nothing more to it than that, right? So I'm looking at the monthly time frame, right? So what I want to do is I want to understand the candles as it relates to the time frame that I'm looking at, right? So this is the monthly time frame. That means every one of these candles represents 1 month of price data, right? And if you understand that, then you will know what's the validity in this candle, right? So you'll know so let's say it's a monthly candle, right? This price right here for the month of November went up the entire month, right? So if you look right here, you can assume that price wants to at least continue to the next level of resistance, and then it's probably going to turn around. But you can make some good pips to the upside by looking at the previous month candle. For example, if you look right here at this candle, price was going up, but then it rejected off. So that's November, October, September, August. This would be July's candle right here. So July's candle started going up, but then it rejected off, right? So you could assume that prices right here, up here, this wick represents the sellers in the market. So this is where the sellers, so price went up this high and the sellers pushed it down. So at this level right here, the sellers simply stepped in. It's no more to it than that. The sellers stepped in. The banks pushed this price to the downside, right? And so let's say if this is July, August, so August went a little lower in August, and you can see in September it was pushed all the way down, right? So if you saw this rejection wick and you decided to short this from July through August to September, you would have made a lot of pips. So let's say you took this short right here. Let me blow this up just a little bit. But let's say you took this short at the close of this candle because you thought price was going to follow through and keep going shorter, as well as momentum shifted. Momentum was shifting to the downside as seen on the stochastic indicator. Let's say if you took a short position at the break of this candle right here and you rode it down all the way through September, let's say you closed out where the close was, right? Where the candle closed at the end of the last day in September, it closed out right here. So you would have made 432 pips, just by just reading the market. It's nothing really difficult to it. It's nothing really hard about it. You just go in and read the markets. Now you also got to remember, you want to trade the highs and the lows. You don't want to trade the in-between, because the in-between is the unknown, right? So in any session that you're trading on, if it's the 1 hour, which is the intraday, you want to either trade off the low of the day or the high of the day, depending on which direction the market is flowing. If you're trading on the 4 hour time frame, which on MT4 that's how I monitor the weeks, right? So you want to trade off the high of the week or the low of the week. You don't really want to trade the in-between stuff, because the in-between, you don't know if price is going to turn around. You know if price is going to stall out. You don't know that. You don't know. So increase your winning percentage by either trading the high or the low of whatever time frame that you're trading, because that time frame represents not only what the candle is valued at in terms of time, but it represents what you're looking at. So if I'm looking at a 1 hour time frame. Let me show you guys what I mean. Showing you is better. So if I'm looking at a 1 hour time frame, I'm looking from this line to that line, right? So I got my session breaks on here. I know that this is 24 candles, 24 1 hour candles. So I am only thinking about that day. I'm not worried about what's going to happen tomorrow. I'm going to look at what happened the previous day to try to get an indication of what today may do. But I'm not worried about, tomorrow. I'm only focusing on either the high or the low of that day. All of this stuff, I shouldn't be entering trades here. I shouldn't enter trades here. I shouldn't enter trades because the opportunity to trade is over. I'm not saying you wouldn't be right in your analysis. So let's say you right here, you went short in this area. Yeah, price fell, but then it pulled back. So you may have gotten spooked and got out of the trade, or, you probably thought the price was going to go against you or something like that. But if you came in and you took the sell here, even if price comes back a little bit, you're still up in the trade. So, you're probably not as quick to close out of the trade, or you may have closed out already in profit, or you may have took your profit off the table. So I just say all that to say this. Depending on the time frame that you're looking at, you only want to be trading off the high or the low of that session. The high or the low of that session. If you focus on being able to identify the high and the low of a session, you will increase your trading wins dramatically. You'll increase that dramatically. But back to this video, let's go back. So let's look at what we're looking to do with the pound USD. Okay, so price rejected. Now price has found support right here. We found support, right? As a matter of fact, price is kind of like trading in this range. And why is this support? It's support here, with support here, with support here, with resistance here, support here, right? So this is a good level, right? That also tells me price is more apt to go up. It's probably want to go up than down, right? So I would say price wants to go at least to here, at least to this area. Now this is the monthly time frame we're looking at. So this is 400 pips. 400 pips still, because this is the monthly time frame we're looking at, right? So let's get rid of this line and let's go down to a lower time frame. Let's go down to the weekly. So now the weekly just shows us a little bit more of what price is doing. So price came down, went up, it found support here, went up, found resistance here, came back and retested that same level of support, and it bounced right off. So we could assume that price wants to go up and retest this, at least to this resistance level that it found last time, right? So we probably can get another, between 200 and, let's say if the price only comes up to here, maybe like 200 to 300 pips out of this move, right? All right, so we can be committed to price going up. We can commit to price going up, right? Now, of course, that doesn't mean price is going to always go up. Price may break down, and if price breaks down, then we come in and we look at and see what price is doing, what it's giving us, and we look to take another opportunity, right? We may want to look at something like this, right? But nevertheless, our bias is to the upside on the British pound USD for this upcoming trading week, right? Okay, so we've confirmed that price is still moving up on the weekly time frame. Now let's go to the daily time frame, because we all know if you trade with me, then this is where I get my signals from the daily time frame. Okay, and we simply want to analyze what's going on the chart. We don't want to reinvent the wheel. So here's what I saw. Price bounced off this level of support, and I think price wants to go back up into this level right here. But here's what we have in front of us. We have an early level. We have another level of support. Resistance right here. So price can turn around here, or it can make its way up to this resistance level here. We don't know what price is going to do. So now, but with that, we take an if-then approach. Really easy, right? So what we want to do, if price fades back and retest this minor level of support right here, then we'll be looking for a reason to buy back into this. Let's say it gives us an engulfing candle, or if it gives us a pin bar at this level, we'll be looking for a reason to buy it back up, at least to this level here for 200 pips, right? Because remember, we have to respect this level of resistance right here, unless price just simply breaks through it, right? So we have a few options. If price goes down, because remember, our bias is to the upside. So if price fades back down, we can get a trade to this first level of resistance. We want to be cautious around this level. And if price continues to go through it, we'll wait for a pullback, and then try and trade it to this upside, right? All right. So that's if price continues to move up. It fades and continues to move up, right? So what happens if price just dies? Goes down. We'll wait for a pullback to this level, because now support turns into resistance, and we'll trade it down, okay? But I know what you're saying. You're saying that's all fine and dandy, but this is the daily time frame. Where I'm not going to see this on the daily time frame, and it's going to take forever to do it, right? So here's what you do. You really want to be looking at this stuff on the weekly. On the 4-hour time frame, because it looks different on the 4-hour. You can actually see it a little bit earlier. So if you go to the 4-hour, okay. Now a little clearer. We'll be able to tell if price is beginning to break down here. It's going to break down here, or maybe comes down a little bit further for another rise to the top, for another rise back up, right? We'll be able to tell. So price may come here and rise up, or it may come down a little bit further and go up, right? It may retest these levels of support right here. Or price may support turns into resistance, then we'll be looking to go short to this first level right here. Trading is as simple as that, guys. Easy as 1, 2, 3. You can set, so what you can do is this. Now that you have your overall bias in the market to the upside, cautious because price still may fall, all you want to do, if you work from home or you're able to access your computer a few times a day, you know it takes 4 hours for this candle to close. It takes 4 hours for each one of these candles to close if you trade off a 4-hour time frame. So set your alarm to just go back and check this one. Just check the pairs that you've identified that has a potential for a setup for next week. So you don't want to go every 4 hours and check all of these pairs, right? But if you have about 3 to 4 pairs that you're just waiting to set up for a trade this week, just go every 4 hours and check those, or put them on your phone or something, and just look. You already have your plan. You already have what you're looking for the pairs to do, right? So you already have your trading plan, right? I'm looking for pound USD to do this or do that, right? You already have your trading plan, and if the opportunity presents itself in the market, you just go and trade your plan, right? But you don't have to look at every pair. That's why it's good to go into your charts and look at your potential setups over the weekend. Identify those pairs that has potential setup potential that you can possibly trade, and then come back and look at those pairs every few hours, every 4 hours, to see if it's doing what you thought it would do, right? And remember, the key to this thing is, guys, you always want to get into a trade early. You want to catch the highs or the lows of the session that you're trading. So I know on the 4-hour time frame, this price is going up, right? Well, put it like this. We're on an uptrend. I know this is a pullback. This looks like a pullback 61.8. So I draw pullback, yep, 61.8 level perfectly. Hit it perfectly, right? But I would have already predetermined that I'm looking for a buy move, especially when these levels go, right? So I'm waiting on a pullback, right? So it comes out. I'm only looking to trade the low of this week. I'm waiting on the pullback. When the low is identified, I'm here to take the trade. My stop goes back here, right? Why does the stop go back here? Because so this price can linger all down here all at once, right? But what I'm saying is price is going to go up, and it's not going to create a lower low. Only time I'm wrong in this trade if price creates a low lower than here. Creates a low lower than here. That So I let the market tell me I'm wrong. I'm wrong if price creates a low. If it closes lower than this section right here, then I'm wrong. Then price wants to continue to go lower. But price can do whatever it wants all around here. It can get all down here. As long as price never breaks this low, closes below this low, I am still right in my analysis. So I rather have a wider stop loss, but be right in my trades than have a closer stop loss and get stopped out prematurely. But that's a video for another time. You know, we could talk about stop losses and why I set my stop losses as wide as I do. I want the market to prove me wrong in short. But nevertheless though, so my bias would have been to the upside. I waited till the week created this low, and then I would have put in an order here, stopped back here, and I would have let the trade play out. And as long as price, so now more recent price action, price can go all the way down here, guys. Price can do whatever it wants down here. As long as price doesn't break this low, guess what? This price is going up. This price is going up. As long as it doesn't break that low, price is going up. So you have to be patient and you wait. You have to be patient and you just wait to see what price is going to do. If price breaks this low, if it closed below this low, that means the seller, you have major selling from the banks, because retail traders cannot push price down this far. So if price breaks this low, that means the banks have stepped in. They want price to go lower. And you could just wait for a pullback setup. Wait for a pullback setup and trade with the banks. Right? Don't try to reinvent the wheel. But if price never breaks this low, then you best believe price is going to go higher. So get in the market when the week presents its low of the week. How do you identify the low of the weeks? You have wicks, pin bars, you have momentum shifts to the other side, and you can identify the wick like the weekly reversal takes place in the middle of the week, like on Tuesday evening, Wednesday, Thursday, early Thursday. You can identify the midweek reversal. So you use those tricks too to watch the market as well. But trading is not difficult. It is simple. You have to understand these concepts and put it all together. It's a puzzle. But once you understand the concepts and you step away from the charts, then you can really realize trading is following the banks. I'm not going to call it trading. Following the banks is not hard. You just have to be patient enough to wait to see what they're doing, and then you just hop on board. That's it. That's trading 101, trading in a nutshell. Alrighty guys, so I'm gonna quit talking. Now I was gonna show you guys a few pairs, but this video is getting kind of long. Alrighty guys, thank you for your time. If you like what you're hearing, again, and I know I don't say this a lot in all my videos, but please subscribe, like the video, leave a comment, and share this video with someone that that's probably new to trading or wants to gain a deeper understanding of the markets. And also, you can visit my website at www.learnandtradeforex.com. I got some other videos on there. You can actually become a member of the website. It's free. Doesn't cost anything to become a member. All right, guys, so I'm out.